Hello guys, now let's look at a transaction which either the entity or the other party has a choice of settling in cash or by issuing equity instruments. All you need to note here is this, don't let us complicate it at all, is that if the entity has incurred the liability, that is, it has to settle in cash or other assets, then it should account for the transaction as a cash settled share-based payment transaction. If no such liability has been incurred, the entity should account for the transaction as an equity settled share-based payment transactions. Okay? And that is that for equity settled share-based payment with a cash alternative. Now let's look at relevant disclosures for share-based payment transaction. IFRS 2 requires an entity to disclose information that enables users of the financial statement to understand the nature and extent of share-based payment arrangements that existed during the period. So the entity will disclose the following. One is a description of each type of share-based payment arrangement that existed at any time during the period, including the general terms and conditions of each arrangement, such as the vesting requirement, the maximum term of options granted, and the method of settlement. Okay? And also, the number and weighted average exercise price of share options for each of the following groups of options: the ones outstanding at the beginning of the period, the one granted during the period, those forfeited during the period, those exercised during the period, those that were expired during the period, and those outstanding at the end of the period, and those that are exercisable at the end of the period. And also, for share options exercised during the period, the weighted average share price at the date of exercise must be disclosed. If options were exercised on a regular basis throughout the period, the entity may instead disclose the weighted average share price during the period. And for share options outstanding at the end of the period, an entity must disclose the range of exercise price and the weighted average remaining contractual life. And if the range of the exercise prices is wide, the outstanding options shall be divided into ranges that are meaningful for assessing the number and timing of additional shares that may be issued and the cash that may be received upon exercise options. The standard also requires disclosures about fair value measurements and also disclosures about effects of the share-based payments on profit or loss for the period, and also the effect on the statements of financial position. Okay? These are the disclosure requirements as required by the standard. Okay? Now, I want to give you this as a challenge. Okay, let's talk about this really. Just go and think about it. In a share-based payment transaction, should there be deferred tax implication? Think about it and let me know how you determine the deferred tax related to share-based payment. Okay? Thank you very much, guys. Thank you for going so far. You have learned a lot. Really, you have learned so much. This is a work of almost 2 years completed. So if you have gone through all the videos, kudos to you. Keep it up, guys. Thank you very much. Have a good one.